But let's speak about some corporate conversations. This morning, I spoke with Radico Khaitan CFO Dilip Banthiya from the sidelines of the Motilal Oswal conference, and most importantly, asked him about the demand in the second quarter, the expected volume, especially after a stellar first quarter performance that the company had, and a few niggles we had in the second quarter so far. Hear him out.
This is one of the best time for liquor industry, alcohol industry, is due to the various regulatory changes done by the state governments, which is improving the revenue as well as this thing. In first quarter, we grew our volume by 32.5%. Our top line was also in line with the volume growth. Our EBITDA was up by 55% and the bottom line was up by 76%. The trend continue and the volume growth will continue to be in this full year, FY26. We are going to have our volume growth of more than 20% in our P&A and 20% plus in our this thing. So we are confident to deliver an excellent and all-time high number in FY26.
All right, so that sounds very optimistic, largely because after the first quarter, you said that you are targeting 20% volume growth for the entire year and 15% plus volume growth for P&A. Now you say that 20% plus volume growth for P&A and 20% plus growth coming in for your overall volumes as well. But you know, during the second quarter, there were also a lot of weather-related disruptions that took place. Has that impacted your sales in North India?
No, I don't think so. Weather-related disruption is taking this thing. The demand and the consumption is intact in our industry. The volume is coming. Radico is growing double the volume of the industry. And we are confident because of our offerings and bouquet of the brands we have delivered in the market, right from Indian Single Malt Rampur, Jaisalmer Indian Craft Gin, the Ranthambore, Royal Ranthambore, which is a whiskey at the Scotch price point, entry price point, is doing extremely well. In the first quarter, we grew by 90%. Another Prestige Deluxe whiskey, it is After Dark, it grew by 130%. So we are growing every brand. And I think the two new offerings are also going to do, which we are taking the Spirit of Kashmir. It's a luxury vodka at 3,000 rupees price point. And Morpheus Super Premium Whiskey, which is again higher than the current blend in the super premium category.
All right.
I think the brand bouquet is doing extremely well.
So what proportion of your overall sales currently comprises of this luxury portfolio, and at what price, at what rate will this grow, and what will the overall contribution be here over the next, say, 3 to 5 years?
So luxury and semi-luxury portfolio comprises roughly 10% of our bouquet. It's growing more than 50%. Last year also we achieved a turnover of 340 crores, and in FY26, as we have guided, that we will cross more than 500 crores in our luxury and semi-luxury portfolio. I think in next 4-5 years, this will be 20% to 25% of our top line, which is what we are envisaging.
So what does that do to your overall margins then? Because 20 to 25% coming in from a business that has much higher gross margins. In the very near term, you have tailwinds in the form of, the UK-India FTA impact that will come by, which will reduce your import cost on bulk Scotch. And all the other prices have been fairly stable. They've, after a lot of volatility, entered stable environment. So what kind of margin improvement can we expect this year and over the next 3 to 5 years?
As we guided that this year we are going to improve our margin by 125% to 150 basis points, and next for 3 years we are going to achieve 125 basis point margin improvements on CAGR basis. That's how we are going to achieve margins of high teens in 2028.
All right, high teens margin by 2028. And I just wanted your thoughts on competition right now, because recently, Imperial Blue was bought by Tilak Nagar Industries. So obviously that brand will have a fresh new set of owners. The business will grow a little faster than what it was growing earlier. And we have Sula as well, which is the wine company, which we understand from our sources, which is looking to acquire a couple of smaller whiskey brands too. Is it getting competitive? Because, on the one hand, you have listed companies, on the other, you have these acquisitions that are taking place, and then you have, smaller Indian single malts as well, which are making waves in the market. So all of this, will this impact your market share?
So in fact, Radico is known for its organic growth. We continue to work on our brands, and market has always been competitive. And I think competition makes the best out of you. So best brands wins the market, and ultimately the consumer choice prevail. So I think we are doing on our work, and let the competition actually bring so that the consumer gets the best. So that is our endeavor, to keep delivering the product which are better and keep doing the work for consumer. I think the competition is welcomed, and we will continue to compete in that.
All right. Your balance sheet has become a lot better than what it was, say, a couple of years ago. Now you have a debt of close to around 410 crores itself. Are you looking to pare this down further, or do you believe you're comfortable at these levels? And if you're comfortable, then will you invest some more in capex going forward, maybe take a little more debt?
So as far as debt is concerned, we've repaid 160 crores of debt in Q1. And I think the run rate for debt repayment will continue in coming quarter as well. There are no large capexes lined up. There are capexes on malt and other things which are in the range of around 150 crore every year for next 2 years. So I think by mid of next year, we will be almost debt free.
All right, that is a confident sounding management of Radico Khaitan, on track to do their best ever performance in this year, over 20% volume growth in this year, along with margins improving by about 130 to 150 basis points, targeting late teens margins by FY28 as well, with the luxury portfolio growing in contribution from 10% to 25%. More importantly, they become debt-free by the middle of next year. The stock, which was in the red for most part of today's trading session, has just inched mildly higher, but has been a bit of an outperformer in the past as well.